I want to follow up on what Romain was just saying. We have a sell-off in stocks. We have a sell-off in bonds. The two-year yield went to as high as 5.11%. Is the scope of the reaction justified given what we heard from Fed officials and the data we got from ADP this morning?
Yeah, Scarlett, it's an interesting question because we really have had this story for quite a while, right? We've had the Federal Reserve telling us they're going to raise rates. From the last meeting, we saw that the dot plots suggested that. We've heard Fed speak, as you guys were mentioning as well. We got the minutes yesterday. So we've kind of figured that we were going to have higher rates. I think that the market still wasn't completely in line with what the Fed was saying, thinking that, it's a strong economy. We're going to hold in there. Things are going to be good. And the Fed's not going to continue to raise rates. They're going to let this have this soft landing. And then we get the ADP report this morning that showed an outsized gain in jobs. And a lot of those jobs, Scarlett, are the service-oriented jobs. And that's what's driving the economy. So it's telling us that things could start to get hot a little bit, that maybe that inflation continues to go up. Some of the jobs were in construction. We know housing is looking for that. So there were some elements, and combine that with the PMI numbers, and I think you have a market that says, wait a minute, maybe we are going to go up closer to a 6% on a Fed funds rate, and that made it nervous.
That made it nervous. How much nervousness is there about tomorrow's jobs number then? Because that's the official print, right? ADP, there's a lot of discussion about how much it really predicts what the non-farm payrolls number will look like. But the jobs number is the one thing that we know the Fed will definitely pay attention to in addition to CPI next week.
Absolutely. So I think some people probably raised their estimates after the ADP report this morning, but you know that ADP and the payroll numbers don't always go hand in hand. So it's not necessarily saying that we're going to get a much higher than expected payroll numbers, but I also think people are going to be watching average hourly earnings, right? It's unit labor costs are a huge component of what's keeping inflation so sticky right now. So I think the Fed's going to be watching what do those average hourly earnings look like? Are we starting to moderate on some of those costs? Are we getting more people into the labor market? So does that participation rate help us a little bit on the inflation front and on the wage front by bringing more people in? So there's a lot of elements tomorrow that we'll be watching, but you're right. It's going to be a big number than what we saw with ADP in terms of its potential effect in the market.